Hi everyone, I'm Mirela Ciomanu, lead editor with The Papers, and I'm thrilled to welcome Karl Mohan, EVP of Financial Services and General Manager for International at crypto.com. Hi Karl.
Hi, Mirella. How are you?
I'm fine. And I'm excited, to discuss how banks are becoming more open to experimenting with digital assets. In 2025, the Papers is diving deep into Web3 payments, aiming to bridge the gap between traditional financial players and Web3 ecosystem. Our goal is to help businesses and consumers confidently leverage stablecoins, tokens, and CBDCs for faster, more efficient transactions, both domestically and globally. Today, Karl will share with us his insights regarding crypto.com's newly launched custody solution. Also, he's going to talk about the adoption, appetite, and fears of financial institutions when it comes to digital assets, and the evolving regulatory landscape for digital assets, and much more. So grab your coffee and stay with us for the next 20 minutes or so. We'll see how discussions is going to evolve. So without further ado, let's dive in. Karl, I'm so excited to have you here today because you've been involved in the fintech and crypto industry for such a long time, financial services in general. And I'm curious to learn what excites you the most about this space and where the industry is headed.
Mirella, firstly, thank you very much for having me on the papers. As a ex-banker, totally understand and aware of the deep impact that papers has made in terms of providing insights, knowledge, and news in the payments and financial services industry. So it's been an absolute pleasure to be on the show. Let me
For the
start.
kind words.
Let me quickly start with what I'm super excited about. Look, I've been in the industry both in payments as well as the crypto industry now for a while. And I think the first one that is absolutely exciting me is this whole convergence between financial services and the whole crypto industry. So if you think back 4 or 5 years ago, or even 3 years ago, one would say, financial services, which is banking, payments, and all of that, stood in isolation of the crypto industry, which had this view of, kind of disrupting financial services. I sense this year and going forward, we're going to be seeing a convergence of financial services and what one would consider the crypto industry. Now, this could be seen as, including payments, deep innovation using stable coins, the ability to move monies internationally rather rapidly at a fraction of the cost that would cost most, whether it's small businesses or individuals, and to the point of tokenization of real world assets. And this could include, bonds, securities, and so forth, which would mean instant settlement, faster settlements, and also around the clock trading. Those are the things that are exciting me at the moment, Mirella.
Yeah. So you mentioned now there is this intersection between traditional finance and the crypto industry. And at the intersection, you mentioned, different things like payments, instant settlement, tokenization. And I'm thinking that at this intersection, also we have this digital assets custody service. Can you please explain what is this service about? And how is it different from traditional custody solutions?
Sure.
Starting with technology, process, people, everything, the
Yeah.
differences.
So if you think back about traditional custody, and most people would think about either share bond custodians, or even if a bank, right? A general bank is a custodian of monies, and in this case, generally globally today, you have e-monies. Where things are changing, and this is where we have launched our recent custody business, both in the US and Singapore, is the convergence of financial institutions like banks and other organizations, whether it's superannuation industry, hedge funds, and all of that, looking to invest themselves in certain crypto assets, primarily Bitcoin, Ethereum, Solana, which has become very popular among institutional investors. The second is for these institutions to offer their customers the ability to hold those assets with them, right? So let me break this down in kind of very high level, and then I'm happy to go into the detail if you require. So let's take the regulatory layer first, right? So globally, we're seeing increasing regulatory clarity, and I'm sure we'll talk a lot more about regulation on this interview. The first one is the regulatory view on creating rules that are specific to custodying crypto assets or digital assets. We've seen that in traditional finance products like securities, bonds primarily, and this is now being developed by certain governments specifically for the digital asset industry. For example, in Singapore, the Monetary Authority of Singapore has come up with clear rules. We've also since obtained our trust charter in the US, in New Hampshire, under a non-bank trust charter to enable us to hold and custody these assets, applying the same fiduciary duties a custodian would have. So the first one is the regulatory layer, and that provides the fiduciary duties of a custodian like us to protect a customer assets. That includes segregation of customer assets from your own funds and ensuring you have proper bankruptcy remote protection on customer assets and so forth. So that's the first one. The second, which is unique, so I guess the way I'm trying to get at is the first part, not really unique. Banks do this today with monies. They understand their fiduciary responsibility. But the second part, which is unique to the digital asset industry, is this is, as close as you can get to physical asset. It's hard asset, right? Which means that it's no different than you custodying gold, for example. So you'd have to have proper vaults and ensure that only right people would have access to it and all of that. So I can break this down into two parts, primarily, Mirella, for your audience. The first one is the technology layer. I think many people have read about it. How do you manage your keys and all of that? But without getting into the details, we have removed the complexity and applied kind of like things that most financial institutions would understand. Role-based access, right? I'm simplifying it, but to implement role-based access in this technology layer is a little bit complicated, but we have managed to extract that and simplify it for financial institutions. So your classic 4i jack that you'd see in most financial institution gets applied for this. So that's one, role-based access. The second is the ability to account and ensure proper reporting and enabling compliant reporting from multiple sources. So you have initiator, approver, and reviewer, including treasury management people getting access and being able to instruct where funds should move and how you manage that and all of that. That's the second. And I guess overlaying all of this is a key essential component, which is information security. As you know, in the digital asset world, information security is paramount because all wallets, unlike banks, which is sometimes, kind of disconnected from the internet. So here, every wallet is directly connected to the internet. And how do you protect that? And how do you ensure that bad actors do not have access to them? Is what we have kind of innovated and applied to our own custodial solution, which is now available to not only financial institutions but major institutions around the world.
Yeah. So to sum up, the layers are regulatory, and the unique one is the technology. And part of the technology, you have all these managing keys, rule-based, information security.
That's
And now,
correct.
yeah, thinking of all these qualities, I'm curious about crypto.com service. Where do you operate and what markets do you have noticed a bigger demand or have shown a bigger demand for this solution?
Uh, we've currently launched into two big markets. The first one is in US, Canada. As you can
Okay.
imagine, it's a global large market, and we've seen a huge number of adoption in that market. We've also launched in Singapore under an exemption from the Monetary Authority of Singapore to offer the services, and currently also offering the solution from here. It is growing rapidly, and the uniqueness is because we have innovated this technology layer throughout our entire period of existence. And so not only do we have the technology, but also the business process and people to support that over the course of our own growth and trajectory here.
Yeah. So in a way, from what I noticed, the demand is required from countries and institutions where, let's say, the authorities are more open to experimenting with digital assets. However, yeah, we notice that there is this tendency all across the globe for banks to change their attitude towards working with crypto firms. What has changed? What factors do you think are making financial institutions more open to collaboration now?
Mirella, it's very interesting in my role as, now EVP of Financial Services, but also I look after all of our global banking partnerships and relationships. Over the last 4 years, it has been a change in direction. Now, what has led to this change in direction? Uh, and a visible change in direction is most banks that I talk to, whether it's your Deutsche, Citi, JPM, Standard Chartered, all of these big players, every one of them have a digital asset division. Every one of them, you would either have a head or VP, SVP of digital assets, and they've been all pursuing a digital asset strategy. So that's number one. Now, what's led to this? A number of factors. In our case, we have spent considerable amount of time educating and bringing a lot of the senior stakeholders in some of these banks along the journey. It takes a significant effort in terms of educating them. The second, I think, is the more important one, is the initial launch of ETFs, like whether it's Bitcoin,
Mhm.
since then, Ethereum, and I think soon to be launched Solana, is also driving a huge number of institutional adoption, right? So, you've got, the likes of BlackRock already involved in this, significantly invested in the industry. They've also been, kind of bringing a lot of these financial institutions along the journey as well, right? So with this combination, I think where we're headed to is you'll see more and more financial institutions, not only the big ones, but also local market players, whether in-market big banks, the service providers that have been historically focused on financial services only, gravitate towards also providing and offering services in the digital asset space.
Yeah. So here it's a lot of, let's say, influencing. I mean, you have big players that have this strategy, then you have big companies that are embracing these new developments, and in a way, everyone wants to join. But what I see, it's also a constant thing. You are mentioning, including crypto.com, when it comes to custody services, offering mostly services related to Bitcoin, Ethereum, Solana. If you are to think, what are the main features of these three types of blockchain rails? I mean, here I'm thinking the whole ecosystem they entire, because it's also the blockchain behind, it's also the token that is moving, it's also the efficiency. So if you are to think of their common characteristics, that it seems that they are the dominant players. What are those?
So
Because I'm
maybe, sure.
because I'm thinking, yeah, that these things are the things that most of the crypto companies should explore in order to be accepted by financial institutions.
So I'll break it down into two parts. I think the first one is the type of blockchains that is supported by our custody solution. So we already support more than 200 or 250 tokens on our custody solution. So
Great.
unlike other players, we already do that. And the
Yeah.
reason we are able to do that is because of our institutionalized knowledge and experience in managing tokens, right? So I think that's the first part that I wanted to highlight here. And the examples that I gave, whether it's Bitcoin, Ethereum, Solana, is because of the ETFs, and some of these institutions already hold them because of the fact that it's approved. And our or at least my thinking is that there would be other tokens being approved for the ETF, or at least a basket of tokens that will be approved, right?
Yeah.
So that's the first one, is in terms of our own technical capabilities at crypto.com. We can support any token, any chain, and that's already available off the box, right? The second part is for financial institutions, however, why are they gravitating to maybe top three, top five?
Yeah. Yeah.
Is yeah, so it's scale, right? So if you think
Hmm.
about it, these tokens already capture 80% of the total market cap of, once you include stable coins, it's 80-90% of total market cap of the entire crypto digital ecosystem, right? Digital asset ecosystem. So I sense, financial institutions gravitate towards A, stable coins, or B, the top four, five tokens. And the reason being is because of market cap. So it's got greater liquidity, its ability to trade. When you're trading large volumes, especially for the size of large financial institutions, you have the depth and liquidity to actually perform those trades. And I think that's what's driving the gravitation towards these chains. When it comes to chain maturity as well, I think the
Mm.
top 50, including Kronos, which is a chain that historically we support and continue to support, has got all of the necessary technical capabilities, including security and all of those frameworks implemented to provide that degree of comfort to the financial institutions, right? So, so if you take the top 50 tokens, generally, top 50 to 100, I think it's generally well accepted. And then it becomes a factor of liquidity, how much they're trading, and that's the tokens they choose to trade on.
Yeah. Great. And now I'm curious. Yeah, we talked about banks being more into this space. However, they still have some concerns when adopting digital
Yeah.
assets, solutions, services, products. What are some of these concerns?
So I can address the historical concerns, right? So uh, historically, the main concerns, and maybe wrongfully so, is the perception of money laundering and conviction.
Mm.
Now, in the scale of total volumes and transaction, it is super small. So, for example, there's a lot of studies out there that actually have benchmarked the degree of money laundering that can be perpetuated in the digital asset, or at least the crypto world, compared to cash and cash equivalents in the
Yeah,
banking
yeah.
system. It is super small, right? But still, perception matters. And that's been the historical challenge for the industry, because we've had greater degree of, I would say, negative publicity that created headlines, and it's a lot more sensational than what's underlying it, right? So let me walk through the kind of changes that will drive that change in perception. Number one, players like us at crypto.com, we have historically and continue to focus on regulatory compliance and information security. It's been our genesis thesis that the world will focus on regulated exchanges like ourselves and highly secure exchanges like ourselves. So from day one, we focus on building it. So it took us a little bit longer to grow to the scale we are, just 8 years. to now be one of the biggest crypto exchanges in the world. But others grew faster by circumventing and arbitraging regulatory differences, right? We didn't do that, and we're focused on building that regulatory mode. That change will occur, and I think most bankers see that, or most financial institutions see that. The second is the change in regulations themselves, right? So we've seen MiCA launch in Europe, where now it's a pan-European regulation. We have got very specific licenses in UAE under VARA, and Singapore has had that license for a while under the Monetary Authority of Singapore, right? We've seen Hong Kong launch its own regulation recently, and in fact, the SFC today, in this morning's presentation at Consensus, highlighted their focus on actually growing that ecosystem further and investing further, right? So you're going to see financial institutions thaw to the idea that digital assets are here to stay. And then in terms of evolving markets, of course, the US is still the biggest. We've seen with the change of administration, a greater focus on digital assets and the need to regulate the industry, one that is fit for purpose and relevant, so to speak, right? So I sense that historical iciness of financial institutions towards the digital asset industry is going to thaw, and it's thawing very fast.
Yeah, you mentioned many geographies, and actually, I prepared the question, but now I don't see that relevant regarding what regions are more crypto friendly and what are the opposite side. But you mentioned UAE doing something, Hong Kong, Singapore, so we have Asia, then we have Europe with MiCA, and then, yeah, you mentioned what's happening in the US. But still, if you are to think where are the best places for crypto businesses to thrive, and where are the places where are the most hurdles in terms of regulation or lack of, I don't know, market clarity around the whole story,
Sure.
what would be your top?
Mirella, I think you look at the global markets in general, right? So we're very focused generally in the G10. We've got a team license in Hong Kong, we are licensed in Singapore and major main markets, right? If you look at the main markets globally, they're all gravitating towards reasonable, fit for purpose, sensible regulation. All, right?
Yeah.
US is heading that way. I think this year, with the change in administration, we will see that. So historically, it's been hard. As you know, it's not known secret, but it's going to be a lot better this year with a greater focus on coming up with sensible legislation. I would think the outliers would be places like Australia and Korea at the moment, where there is no clear regulation. So it's not lack of regulation. Now we are actively engaged with the regulators there, having dialogues with them, and actually kind of also bringing them along the journey in terms of where the global regulations are, right? So as you know, the digital asset world does not operate in isolation. It doesn't have a single home. So, one could argue, for example, securities or bonds or anything else that previously one would have purchased as an investment has a home, right? So you can talk about, oh, I bought a share in the NASDAQ, and that means it's cleared and settled in the US, or if I bought Japanese bonds, that means it's cleared and settled in Japan. So regulators had this view that I could regulate this based on my own country specific requirements. Now that's gone, right? So you need to harmonize legislation so it is standard across the globe. So that requires a degree of cooperation. And I think most regulators are waking up to that you cannot come up with regulation that is isolated to your country, because anyone with an internet connected device would be able to participate in investing or actually doing a whole bunch of things with digital assets, regardless of the country-specific regulation. And that's the challenge, right? So how do you balance the need to protect consumers at the same time? You don't tighten it too tight that your individuals in your country gravitate towards unlicensed service providers. And that's something that we constantly have dialogue with major regulators globally, including in markets like Australia and Korea.
Yeah. So it seems that geopolitics plays an important role here. I mean, when it comes to collaboration, you kind of need to make friends and neighbors.
Ah, for sure,
Good
right?
friends and neighbors.
Yeah, yeah. And you know, I think for us at crypto.com, we have been such a big promoter and pioneers in being regulatorily compliant. So, you know, we have pushed the boundaries in terms of not really pushed the boundaries, but you know, really focused on adapting a very compliant, strong compliance stance to our business operations globally, right? And hence, you know, we are constantly in dialogue with regulators around the world to not only educate them on our own experience now, because we have had 8 years or 9 years of experience in this space and increasingly growing because of our regulatory footprint. You know, not sure, Mirella, whether you're aware, but we recently even launched securities trading in the US, and soon
US,
we'll be
yeah.
rolling that out globally, which means that we have a very strong, you know, reg compliant focus in our business, right? So it's a matter of, you know, discussing and actually, you know, educating regulators as well and sharing some of our knowledge with them.
Yeah. Yeah. And regarding knowledge, yeah, I was also impressed because you mentioned offering over 200 tokens on your custody service, and you said that managing these tokens is based on experience. So most probably you have lots of financial and technologists, experimented technologists working within crypto.com, because yeah, with crypto it's not only about finance. And
That's correct.
yeah, I'm curious to see. Yeah, at the end of every interview, people want to see how the space will evolve, predictions. So, if you are to see how 2025 will evolve, but let's think of a 5 year time span. How will things around digital asset will look like in the next 5 years from an institutional perspective?
5 years is a long time in our industry, but let me try, right? So
If you
I
want, you
think
can select a shorter period.
no. I think 5 years is a nice number, and there's a few trends that is happening that is going to drive this, right? So number one, you know, I am very certain we will see uh, a larger number of ETFs approved. I think that's given. So that's trend number one. We've seen that already kickstarted beginning of last year. That momentum is going to carry on. Number two, which is something I am excited about, is the adoption of Bitcoin as a strategic reserve asset for central banks. Uh, there's two schools here. Some believe in it, some don't. I am in the believer camp. And the reason I believe in it is because I think it's the closest to hardest assets that we have in the digital world, right? So digital world, if you're looking for hard asset, Bitcoin is one of the closest that you'd get to hard asset. And so it makes sense to, for banks, in my view anyway, for them to replace gold, which is a very old narrative that was created, back in the 12th, 13th century. But we have moved on as humanity into the new age, perhaps considering a different means of hard asset, and a definition of that makes sense. So I think that will be the second, and the adoption of strategic Bitcoin reserve is going to gain momentum in the next 5 years. Maybe it'll be this year, maybe it'll be next year, but within the next 5 years, I have strong belief that will be the case. The third is financial institutions, and this is banks. We're going to see a convergence of them with crypto service providers like us. We have already spearheaded this, and we're already demonstrating to the world what is possible. We've published our roadmap at the end of last year to signal to the market what we intend to do. And if you check that roadmap out, Mirella, it's about us moving into the financial services sector. And so therefore demonstrating to the world that there's going to be a convergence between the digital asset, in our case, investing ecosystem with the financial services ecosystem. That's the second. Third trend. The fourth, in my view, you will see greater adoption of stablecoins as a payment instrument, right? So this will be the replacement of, I know the conversation of stablecoins historically has been on the trading mechanism, and that's been the early adopters. But I think the move to, at least from a financial institution perspective, the ability to move funds between banks, even interbank settlements internationally with stable coins is going to increase. I'm not a big fan of CBDCs. That's my personal view. I think it, at least in the major developed economies like Australia, Singapore, UK, US, where privacy matters, it's not a good use. I think interbank domestic settlements, highly efficient, not going to make a difference. But inter-country or international settlements make a difference with stablecoins, right? So it depends on which stablecoins get adapted or which standard gets adopted. And then finally, the fifth one, in my view, I really think, and this is my hope, that we see some degree of real-world asset tokenization, and primarily in the financial markets. I think the financial markets have a greater opportunity to adopt some of the technologies, whether it's 24/7 trading, clear settlements using stablecoins, and the tokenization of those assets itself, whether it's securities, bonds, and so forth, and the ability for individuals to trade or organizations to trade 24/7 will be highly valuable. Would love to see it in the next 5 years. Takes a lot of infrastructural change. I think that would be the challenge, and adoption will be a challenge. But it's a nice dream to have, and I think it'll be a one that will be highly valuable to the financial markets.
Yeah. Thank you for mentioning so many trends. This gives me an opportunity to have follow-ups for this interview.
Oh,
To
not a
see
problem at
exactly,
all.
yeah, to see exactly how each trend develops throughout this year, next year, and so on. Yeah. Thank you, Carl, for today's interview and discussion. I learned a lot. If you noticed, I took note. I took notes here. So for me to learn more about this space, and I look forward indeed for continuing our conversation.
Oh, it's an absolute pleasure, Marilla, and thank you very much for having me on the papers. And I'm looking forward to having more discussions with you.